So in today's video, we're going to be talking about backtesting. Okay, how can you backtest? Okay, it's a very highly requested video, very high in demand. So we're going to cover it in today's video, right? So first things first, before we get into the video, I want to bring to your attention, I want to remind you that every single Monday at 9 a.m. Eastern time, I host a live teaching session in my free Discord chat. A link to my free Discord chat will be in the video description. Okay, 100% free, doesn't cost you a dime to join. Okay, every single Monday. Now, for those of you that are watching this video in the future, I can't tell you if I'm still going to be doing it or not. Okay, I'm telling you at the current moment that I'm making this video on 4/2/2023, I'm doing this. Okay, but that may change and I may not be doing it in the future. Very, very likely, right? So every single Monday, 9 a.m. Eastern time. And then make sure you go up to this event. It'll be in here. You see one event. You'll click that you're interested and then you'll be notified when I jump on, right? It's 100% through voice. It's strictly a live teaching through voice only. Okay. So now that we got that, let's talk about backtesting. So what are we going to do? Well, first things first, let's talk about the platform that I use to backtest. Okay. So I use Thinkorswim. It's called Thinkorswim. Some of you may know it as TOS. It is a charting platform owned by TD Ameritrade, the broker TD Ameritrade. Okay. Now, it is important to note that I am a U.S. citizen, so I'm pretty sure a lot of countries may not be able to use this charting platform. Okay, so I can only give you what I use personally. Okay, if this charting platform is not supported in your country, then well, you got to do the work and you got to search, do your own research, and find a backtesting platform that you can use in your country. That's all I can tell you, because I can only give you what I use, and I can only explain it through the lens of how I use or how I backtest. Okay, so I use Thinkorswim. It's a free charting platform, by the way. And once you have it downloaded and you have everything set, it's downloaded, ready to go, you'll have a screen that looks like this. Okay, and what you'll see in the top right hand corner, you'll see something called On Demand. See that? What you're going to do next is you're going to click On Demand, okay? Because this is what's going to allow you to study and backtest old data. So you can see, boom, it takes us back. And right here, you see this, look at my cursor. You'll have a little date category. This is where you can select what date you want. Okay, so for example, right now I am on January 2018. Okay, January the 1st, 2018, and I have it set to 7 a.m. Eastern time. Why do I have it set to 7 a.m. Eastern time? Because that's the beginning of my kill zone. That's the beginning of my New York kill zone. Okay, remember, I trade 7 to 11 a.m. Eastern time. So you want to treat this like you're doing it for real. So for example, the same process that I do every single morning for you guys in the free Discord chat, or the same process that I do every single day that I come into the marketplace, I do that, but I do it on here backtesting. So I'll go through all the pairs on my watch list and I will look for my criteria. You got to know what your criteria is. If you don't know what your criteria is, you can't backtest. Okay, you got to know your setup. So I go through here and I scan through my setups. I scan through these pairs every single morning. Okay, and we have it set to New York kill zone, right? You can go back and select whatever date you want. So for example, you see these two little arrows right here. You click that, for example, takes you back to January 2017. So it takes you back a year. Then so you click it again, January 2016. So the two arrows takes you back by the year. Okay, and then you have these two little you have these single arrows right to the right of it. And for example, that'll just like skip a month. So like, for example, we're on January 2015 right now. If you click this, like, look at my cursor, you click this little arrow right here, it'll take you to February 2015. Click it again, March 2015. Click it again, April 2015. So this allows you to go back and study go all the way back, go back as far as you can go back very far on this, and you can study all kinds of old data. Okay, it allows you to study all kinds of old data. So we're just gonna start right here, January 2018, and that's how we're gonna do it. I'm gonna go over the process with you. So now you might be thinking, okay, how do we track the data though? Well, you can get very complex with this. You can get very deep with this. I know a lot of you guys that maybe are into tech, you could play around with this and find your own way to do it, possibly that fits you. Me personally, I am a simple guy. I'm not a brainiac. I like to do it in a very simple way. So here's how I do it. So what you're going to do is you're going to create a Discord account. You're going to create a Discord account. It's 100% free to create a Discord account. It doesn't cost you anything to create a Discord account. And once you have your Discord account created, you're going to create a server. So for example, you'll see this little plus right here and it says add a server. You're going to click that. You're going to click, you'll have this pop up. You're going to create my own server for me or my friends. Just click that and you can name it whatever you want. So like, for example, let's say we're going to name it Backtesting. All right, so Backtesting, create. All right, so now we have a server. We have our own server. We're going to delete the voice channel since clearly we don't need that. All right, so we're going to be creating a few different tabs doing this. Okay, so for example, we have a plus right here that we can add channels to. So we're going to create another channel. All right, we're going to rename this. So I'm going to do something like this. So like total wins and L's is what it stands for, total, and then we got W and then we got L. All right, and then you got, so you got your total wins and L's. So that's like where you're going to keep track of the total amount of wins that you got. So like, for example, just the total amount of wins that your setup presents. And then you're going to track also the total amount of L's that your setups have. And then we got the wins tab right here. And that's where you're going to track like your R, like your risk reward. So for example, say a setup gives you 1 R. So like, for example, risk reward ratio. So like we have a 1-to-1 risk reward ratio, for example. Say the setup that you trade has a 1-to-1 risk reward ratio and you get profit target. That's 1 R. So you'll put, for example, like 1 R in there. Okay. Or say, for example, the setup that you have has like 3 R. So say the setup, for example, say the setup is like 3-to-1 risk reward ratio. Okay. So you're like, for example, you're risking $100 to make $300 on the play, and say that setup presents you with a win. That's 3 R that you made. You're going to do this now. You did have 1 R. Now you got 4 R. Okay. And then say the next setup, for example, gives you a loss. Okay. What do you think you're going to put in there? 1 R loss, right? And then say next setup gives you another L. What are you going to put in there? You're going to change it, 2 R. Next setup, say gives you a W and it's 2-to-1 risk reward. So for example, you're risking 1 to make 2. What are you going to do next? What do you think you're going to do next? You're going to change it. And now what does that give you? That gives you 6 R. Just like that, you can see, for example, oh, and also you're going to be tracking your total wins and L's. So you'll be able to see like your win rate when you do that. You'll track like your total win rate and you'll put it in here. So this really cleans it up for you, and it has like that data right there in front of you. Okay. Again, as I said, like you tech people, I absolutely know there's more efficient ways to do it, but I'm a simple guy. I'm not really big into tech, and this is what works for me. Okay. And kind of, I do believe putting in like that elbow grease, putting in that effort to doing this, I think it makes a big difference. Okay. So that's what you're going to do. And it's as simple as that. You're going to go through your O data, which we're about to do here in a second, and we're going to track it. And I'm going to clear this off and we're going to start from scratch. And also something else that I think is very useful for you to do to kind of train your eye is you can create a couple more channels right here, for example, and you're going to like name it wins screenshot, and you're going to post the winning trades in here, wins screenshot. And clearly you can name it whatever. You can tinker around with it, have like your different sections, you know, organize it a little bit different how you want, but I'm just giving you kind of a sample here. And then loss screenshot. Okay. So we're going to go through this and I'm going to show you how to do this. Okay. So now we're on our charts again, 7 o'clock a.m. Eastern time. And we're just, what are we going to do? We're going to go through here and we're going to see if we got a setup. So for example, I'm going to give you this again. We're looking at this. The only way I can explain it is through the lens of my setup. Okay, that's how I'm going to break this down. We all got our own strategies. Maybe some of you trade my strategy. Cool. That's what we're going to do in this video. Okay. But for example, this setup, we had this big, large move up right here, giving us our shift in market structure, right? That's check number 1. What do we want next? We want to swing low level. We get our swing low level. Okay, like, as I said, it's the same exact process that you do in a live market. You just do it on O data at this point. You just do it with O data. Okay. All right. Is there any higher time frame level on this? Remember, the daily bias is bullish, so we're only looking for buys on this. We're not looking for short plays. We want to be trading with the overall trend. Is there any higher time frame level on this? Nope, there's no higher time frame level that I can see. So just like I would do in real market, there would just be no setup on it. There's no setup on this for me. So what would we do next? We would go to the next pair. We would work our way down the list. So for example, now we got AUDCHF. Let's bring up that ticker. Okay, so AUDCHF, okay, daily chart is 100% bullish. Okay, see how we're consistently trending up, bullish market structure. Now we're pulling back here. We are testing a higher time frame level of support. See that? That's a higher time frame level of support. So we're going to mark that real quick. It's testing that level. It's trading down into a bullish fair value gap. And now what are we going to do next? Go to a 4-hour chart. All right, see that? It's testing, that's that level now displayed on a 4-hour chart. We're tapping down into it. You got another level of support down here on the 4-hour. See that? So what you're doing is you're marking up your charts just like you would do in a real market environment. You're treating your back testing like that, and you're going through all this old data. Okay, so we tested in the higher time frame level, but what do we need next? If you're trading my strategy, what do we need? What do we need next? We need a lower time frame confirmation. Okay, my lower time frame charts, main lower time frame charts are 1 hour, 15 minute. All right, so now we're on a 1-hour chart. You see we had this push up right here. So we had that push up right there. We cleaned out these highs. We got our fair value gap confirmation. We got our 1-hour bullish order block here. So let's say, so for example, let's draw it out. What would this risk reward be? For example, say we got long right here. Okay, because that's our bullish order block. That's in a discount market. It's tapped into that fair value gap. Where would our stop be? It would be underneath the low, because we know that. Why do we know that? Well, because that's where it's underneath the fair value gap, sure, but it's also underneath of that key liquidity pool, or where that key liquidity grab was. So you can see, for example, that's 19 pips. Okay, if you look at that little bubble that popped up, see that? You'll see it says 19 pips. Okay, that little bubble that pops up when you drag it, the second line, not the bottom one, not the very bottom one, but the one above that, you'll see 0.00197, 19 pips would be your stop out point. And then say your PT was the high, because that's or your PT was high day, because that's a key liquidity pool. Okay, that is 24 pips. How do we note that in our journal? So another way that you could do this that I think is a little bit cleaner is you can go over to like trading view, for example. So for example, we already know what we're risking on that. Now we're going to go over to trading, and we're going to take our risk reward. So like I have a risk reward calculator on here. You can find that right here. Like I put in long position, and then I just drew like a random risk reward on it. Okay, just for the purpose of finding that risk reward. So you can see I said risk is 19. Again, this is just some random chart on here. Don't worry about the chart that I got on TradingView. We're just finding the risk reward. So you can see on here it says 19 to gain 24. I think that's what we just said, wasn't it? 24, 25. So risking 19 to make 24, right? And see on the risk reward ratio, see how it says 1.22? See that? That's what you're going to be marking in your journal. Okay, that cleans it up so much more when you use the risk reward tool on TradingView. So you're going to have 1.22, and where do you think you're going to put that? That's if it was a win. Let's see if it was a win or not. If it's not a win, then it's going to be you're going to put a 1 in the loss section. So just from first glance, it is looking pretty weak. So let's see what it does. I think it's probably, just at first glance, I think it's probably going to take out these lows right here, but I could be wrong. Yep, so you would have got stopped out on it. See that? See how I tagged that low right there? You would have definitely got stopped out on that. So what you'll do, for example, is now you took an L. You know you took an L on that. You're going to go over to your journal, and you're going to plug it in your journal. So you're going to put on, we have our section that's called losses. You're going to put 1R for the loss, okay? You lost 1R on that play. If you were right, you would have made how much? 1.22. Okay, you would have made one. So let's just pretend, for example, that you got it right. We're gonna remove this just for a second, and let's say it was correct. You got to play right. Underneath of wins, what do you think you would put? 1.22. See that? That's all you would do, because that's how much you would have gained. 1.22. We're looking at this through the lens of like risk reward. Okay. That's how much you would have got right on it, 1.22. But we didn't, so let's plug the 1. Let's just do that. Let's plug 1. Okay, you lost 1R. And total wins and losses, you do something like this. So this is where you can track like your total number of wins and total number of losses. So like you're gonna put wins, you'll put losses. See that? And then you'll keep track of it. So like we got one loss, one. See that? And that's where you're going to keep track of like your total wins and losses. So you can see your win rate on your setups. Okay. And then you'll go to wins. And then like whenever it was an L, for example, we have our win screenshot. We have our loss screenshot. Let's go back. So for example, let's go back to, where was it? 7 o'clock, I believe it was. And let's screenshot it before that happened. So coming down into, for example, let's take a screenshot. You're gonna take a screenshot of before the L and then after the L. And then you can go into like loss screenshot. This is where you're gonna keep track of all that. And then we have it plugged in here. See that? We have it plugged. We have both charts plugged in there. Before, after. Before, after. And you can go through and you can study these charts, and what you're going to do is you're going to look for similarities. You're going to look for similarities within the losses, and you're going to look for similarities within the winners. That is a very effective way to study because you're training your eye to look for those differences, those similarities. Okay, and you're going to do this whenever you have a win. You're going to put it in win screenshot, the same exact thing, but just if it's a winner. Again, you're going to keep track of your total wins and L's. And here we had one L, plug it on one L. How much did you lose? One R. You plug one in it right here. Okay. And that's what you're going to do. It's literally, it is that simple. You're just going to go through here. I'm not going to spend all day going through because this video will be forever, but I think you guys get the gist of what I'm getting through. And then you'll just do the same exact process on, depending on your strategy and how you do it. Maybe you only trade one pair, then you'll just do one pair and you'll go through day in, day out, and you'll look for your specific criteria, your specific roles, and then you're going to track it. Okay. And that's all you're going to do. So like, for example, again, this isn't my setup. I'm just using it for example here real quick because I don't want to drag this video out too long. All right. So again, this is just a random example. I know I'm going to have some troll in the comments saying cherry picking. I'm just doing this for an example, okay, to show you how you would plug it in your journal. So like say, for example, you grabbed AUDJPY as it was coming down into right here. You saw that that was your setup. Okay, it's during a New York kill zone. You saw it come down into this order block right here. And you know, as per your rules, this is a setup for you. It pulled back into a discount. It tested a key level of support. You know that, hey, that's my entry signal. That is my entry signal as per my rules. Okay. I'm going to grab it down into that. And my stop is clearly going to be beneath that key liquidity grab, beneath that fair value gap. How many pips is that? That is 11 pips. Again, oh, here, let me do it back on there. I thought it was going to stay. Again, 11 pips. Again, if you look at that little bubble that pops up on Thinkorswim, wherever you drag whenever you drag that trend line, you'll have data that pops up right there. And you can see 0.11, 11 pips, okay? That's what that stands for, 11 pips, okay? And you know your profit target's gonna be what? Let's say, for example, you're targeting these highs up here. See that? Look at my cursor real quick. Look where it's moving. See those highs right there? Say that's where you want to target. Again, just for the sake of this example, okay? I'm showing you how you would plug it in your journal. Let's say you shot for that. How many pips is that? It is 23. Again, you're looking at this chat bubble, or you're looking at that little bubble that pops up. See how it says 23 pips? So you got to take that data. If we win this trade, we will gain 23 pips, right? And if we lose the trade, 11 pips. So we're risking 11 pips to make 23. And what we're going to do is, again, we're going to use our risk reward calculator on TradingView because we're looking at this through the lens of like we're using a set risk, for example. Okay, we're not doing it through pips because we want to use like a set risk. Like, for example, say you're risking 0.5% on every single trade, or you're risking 1% on every single trade. Okay, that's why we do it like this, and that's why we use that risk reward tool on TradingView. So again, if you're right, you'll make 23 pips. If you're wrong, you'll lose 11. So now let's go to TradingView, and boom. See how I set the risk reward calculator to just something random. We're not worried about any of this price action on this TradingView chart. We're just using the risk reward calculator. to kind of clean it up. I think it makes it much more simple. So you can see we put the risk to 11. See that? Look at my cursor. See how we're risking 11? If we're wrong, we're losing 11 pips if we're wrong. And then if we're right, we're gaining 23 pips. And what risk reward does that give you? 2.1. So just over 2 to 1 risk reward. So what do you think you're going to do? So like say, for example, we got a win, 2.1. You're going to put it into your win category, 2.1. Okay. And then let's say where we got to put the wins at. We're going to put a win at 1. And you're going to do this with every single setup. You're going to go through every single day. You're going to look for these setups. You're going to look for your specific criteria and you're going to track it like this. Okay. You get a win. So you get another win. You'll just put it, you'll change it, you'll update it, you'll edit it and put another win. You get a loss, you'll put it in losses. Okay. If it's a win, you need to be tracking of how much R you make and you're going to update it. You're going to keep updating this with every single setup. Okay. And remember, once you get a win, you're going to screenshot before and after, and you're going to do just like you did with the loss, like I did with this loss screenshot. You're going to do the same thing, but you're going to post it a before and after in the win screenshot. And you're going to do this every single setup, every single day. You're going to go through this old data and you're going to study it. And before you know it, very soon, you're going to have a huge sample set that you can study. Okay, it'll be literally like a book. It'll be like your own personal book. Okay, you'll have all your wins screenshotted in here as per your setup, and then you'll have all your losses in a different section. So you can kind of train your eye, look for the differences in between each. Again, you'll have all your total R made in your wins section and then you'll have all your total L's in your L section. So you'll have like that. You'll have that hard data in front of you, okay? Because you're going to be looking at a lot of data. If you're really serious about this, you're going to be looking at a lot of data, okay? I know it's no fun. And I know a lot of you don't want to do all this work, okay? And a lot of you might be thinking, oh, there's got to be a more efficient way to do it. I'm sure there is, but this is a way to do it. This is a way that you don't got to be all tech savvy to do back testing, because I'm not at all, but this is a way that you can do it. It's very tedious. It takes a lot of time, but it's worth it because it accomplishes the same goal. You have that hard data in front of you. You can see how much, like within your system and your strategy, you'll be able to see the total amount of wins and losses that your setup presents over a large period of time, because you can go back very, very far. I mean, look at this. Look how far back you can go. You can study all that data if you're very serious. Okay. And you can go through all these different charts, look for your setups, and you're going to track all of it right here. You're going to have all your wins, all your losses. You're going to have your total R made. So like you get 2 to 1, or maybe the next trade you might make 4 R, and then you'll update it, and then you'll add it to that. Same with losses. You get a loss. You can't ignore the losses. You got to have those in there as well. You'll update it, your losses. And same deal again. The winning trades before and after, you'll post in the win screenshot, and the loss, you'll post in the loss screenshot. It's very important for you to trust your strategy, for you to trust your system. This hard data does a lot for you. Having that hard data in there, looking at it right there in front of your eyes, having that hard data, and then having those wins, those screenshots, and then right here, you can see your total win rate. That's the way to do it. Again, each day you'll just go through here. Maybe then for example, what I do is I'll reset it. Once I go through all my setups and I find them, you'll reset it and then go back to like a new day. Then boom, you'll fast forward one day and you'll just repeat that process day in, day out. Look for your setups the exact way you do when you're in live market conditions. You do it over here. It's the same exact stuff, literally the same exact stuff. You're just doing it with old data and you're tracking that data. That is the most simple way to backtest. Okay.